Welcome to Commercial Real Estate Unfiltered, the podcast that takes the mystery out of commercial real estate and makes it accessible for everyone. I'm Caleb David, a broker, investor, and community builder with over a decade of experience helping businesses and individuals bring their visions to life. Here we break down the market, share expert insights, and talk about the opportunities that commercial real estate creates for businesses and communities alike. No fluff, no gatekeeping, just real, unfiltered conversations that empower you to navigate the space with confidence. So whether you're an investor, a business owner, or simply curious about commercial real estate, welcome. Let's dive in. Welcome, everybody. Welcome back to the Commercial Real Estate Unfiltered podcast. I'm your host, Caleb David. And today I'm really excited about our guest because this is a topic that I've never learned much about. So I'm excited to have Brad Warren with us today. He's a land banking consultant specializing in helping patient investors build generational wealth through land investments within a 60-mile radius of downtown Los Angeles, with a focus on Antelope Valley, and we'll dig into that a little bit more. With a deep understanding of the real estate market, Brad offers lucrative opportunities for investors looking to capitalize on land assets. And that could be our listeners. I'm excited to see where this goes and who picks up the phone and calls you. Brad, welcome to the show.
Thank you very much. Pleasure to be here.
Yeah. So let's just start basic. It's right behind you, land banking investment. What is land banking investment and how does that work?
So in a nutshell, land banking is, let me do it by way of a story. So imagine you're driving around in the city you grew up in. Maybe you're a little kid, backseat of the parents' car. Parents pass a vacant lot. Mom says to dad, gee, honey, we should look into that. I wonder how much it is. It looks like it might be a good investment. Oh, yeah, great idea. And they don't do anything.
Yeah.
And 10, 15 years later, you're still in the back seat of the car. Obviously, you're a teenager now. You've grown up a little bit. You pass by that lot, only it's not a lot anymore. There's a shopping center there or an apartment building.
Yeah.
Or maybe 100 homes were built in that area. And your parents are like, oh, coulda, shoulda, woulda. Land banking is buying land strategically placed in the path of growth. That's the most important sentence.
Yeah.
Otherwise, it just stays dirt. Holding and waiting for the development to catch up. And then you get the knock on the door from the developer and you build generational or what we call legacy wealth.
Yeah.
That's basically buy it when it's cheap,
Yeah.
sell it to the developer when it's more expensive.
Yeah, when I first got into real estate, one of the things they taught me was they just don't make land anymore. Yeah. From my perspective, and when I am talking with clients, it's land typically appreciates in value. But I think you're exactly right in talking about you've got to understand the growth, the direction of the growth. What are some signs that you look for when you're looking for investment properties or land investment banking? What are some of the signs that you're looking for that kind of points to this could be a good investment?
Basically, follow the money, follow the infrastructure, follow the city council resolutions. When they approve 500 homes to be built in a particular area, that's where you want to be.
Yeah.
Only you need to know that before they approve it. Otherwise, by that time, the land's already bought by either investors or maybe even the KB Homes or Lennar Homes. They've already bought the land. It's too late.
Yeah.
So you got to get out in front of it by watching where the city council approves money to be developed. You got to read the general plan. You got to attend city council meetings, read the newspaper, always trying to stay ahead of where development is going.
Yeah, absolutely. I think being involved in local government in one way or another is super important, no matter what, because you are going to pick up on information before it becomes public. Some people are like, I don't have the time to get involved. It's not that much of a time commitment. You can always go to the city council websites or the zoning and planning websites and find out when their next meetings are. You can watch it online a lot of times nowadays. And it's a huge investment into yourself and into your knowledge bank in order to make a decision.
We have what are called the 10 growth factors. And in the area that we invest, all 10 are going on at the same time, which is why we only invest around LA, down within that 60-mile radius. But pro-business city government is one of the 10 trends, one of the 10 factors.
Yeah.
And we look for that. Quick example, in the Lancaster-Palmdale area, the city council put $180 million of its money into widening the off-ramps on certain of the off-ramps on Highway 14 that goes through the middle of Lancaster and Palmdale. If the city council is putting that much money into widening the off ramps and making it easier for people to get on and off the freeway, that development is coming to those particular areas.
Yeah.
So we immediately start researching what's available for us to buy really inexpensively that we can offer to our investors.
Yeah.
Maybe 4, 5, 6 years before that development comes. Gas station, usually there's the 4 gas stations at the
Yep.
four exits, and then the mini market next to that, and then something else next to that. So that's a sign. That's one sign
Yeah.
of many that we look for.
And do you often target off-market properties?
I asked the CEO of the company, how do we find the land? And he said one way is divorcing couples.
Yeah.
California is a community property state.
Yeah.
Mom and dad or the husband and wife own the property that grandma might have bought 15 years ago, $3,000, $5,000 for a few acres.
Yeah.
It's done nothing. Now they're paying property tax every year, which is very low, by the way, in California as a Prop 13. But they're just tired of it. And now they're getting divorced. And one of them has to either buy out the other one or they have to sell it. So we try to find distressed properties like that, get them very inexpensively, and then make those available to our investors.
Awesome. Tell me, let's back up a little bit here. Like, how did you get started in land banking? Tell me, like, this is not something that you just pop into, or maybe it is, but I'd love to hear how you ended up in this place.
Quick story. So I do a quarterly, my wife and I are going to be married 36 years in this August of 2025. But when we first started going out, I kept a journal, a log of our quarterly net worth. Started all the way back in 1989 when we were getting married. And on December 31st, 2011, I looked at the numbers and I realized, Caleb, my wife could retire on her own with what she had put into her 401k at Oracle. Together with my meager savings at that point, we could retire together. But if I was a single person on my own with just my own money, I didn't have enough. And it was a rude awakening.
Yeah.
So I called my land banker, her name is Marcella Silva.
Okay.
Called her in January 2012. She came to the house, did a presentation at the kitchen table. My wife got up and said, no, thank you. I don't quite get it. 7 to 10 year hold period. I like my Oracle, my 401k. Thank you very much. And walked out. I said, Marcella, I got enough to buy some land. It's the only way I'm going to build generational and legacy wealth is what we call it.
Yeah.
And 2 months later, I had my first property. Since then, I started to buy. I bought another one the next year, another one the next year. Then my wife actually came to hear Marcella do a presentation at a hotel.
Yeah.
Sat there. When it was over, I said, okay, let's go. She's just going to present some properties now. And you said you weren't going to buy anything. You told me that the whole way over in the car. So let's go to the gym. We had our gym bags in the car. We were ready to go. She said, no, I just want to see what the land looks like. Okay. Short story, a long story, very short. She bought 2 of the 4 that was presented. She had her checkbook with her. I didn't even know she brought her checkbook.
Wow.
Why? I'm not going to buy, but you bring your checkbook with you? So now we own 5. All of this time, by the way, I've become a finder, which means a referral partner. And we can tell your listeners later how they can become finders as well, and you can earn referral fees. So I was sending people to Marcella. A lot of my friends were buying land. And so that's the progression of how I got started. And then my wife, and now we own 12 properties total. And in 2018, I left my 40 plus year career as a business coach, got my real estate license, and now I work for the company as well.
Awesome. Wow, I love that. I love how life brings us like twists and turns.
Absolutely.
And it's all about timing, right? I think even with your wife going to that presentation, I think a lot of it is because we don't know what we don't know, we get filled with fear and trepidation. But I think people need to know that there are experts like you that are out there that know exactly what you're doing and can help people with that.
Quick story about timing. So January 31st, 2018, I remember it like it was yesterday. I come home from a meeting, from a business meeting, real estate meeting. My wife's sitting at the kitchen table. Normally she's in her back office. And she's got a very funny look on her face. She says, sit down. I said, uh-oh. I said, what? She says, I've been dismissed from Oracle. I said, what do you mean? Fired, laid off, let go, downsized, right side? Dismissed. I said, what does that mean? It's a new category of terminating people from the company so that Oracle doesn't have to pay unemployment insurance.
Wow.
I said, so you're out of a job? She said, yeah, and I'm not getting another one. I'm 60 some, I think she was 66 at the time. And we're just going to live on your coaching and training salary. And that's it. And I said, wow, okay. We have dinner with Marcella, my land banker, and Rick, her husband, and we'll go and tell them our story. And of course, they'll be very upset and they'll commiserate. We go to the restaurant, we sit down, they say, so what's up? I said, we got it. And we tell them the story, and they both start laughing. Caleb, they're laughing at us. It's like my wife just lost a six-figure
Right.
job, 401k match, vacation pay, steady job, and they're laughing. And I said, and they said, Brad, you're not going to believe this. 2 weeks ago, we scheduled tonight's dinner. There was a moratorium on hiring new real estate agents at the company.
Mm.
Last week, they lifted the moratorium, and we came here tonight at dinner to offer you a chance to be the first real estate agent on our team.
Wow.
2.5 hours later, I've grilled them on what that entails and how it works and the
Yeah.
pay and all that stuff. And I hadn't said yes. We're driving home. My wife says, she didn't say yes. I don't understand. I said, Marie, they're asking me to leave a 40-year career as a business coach, speaker, and trainer.
Yeah.
Travel the world, speaking, training, coaching people. I worked for Keller Williams for 6 years. And they're telling me, no, you're going to stop that and you're going to come and sell dirt. She leans over in the car, Caleb, gets right up next to my ear, and she goes, Brad, you'd be an idiot not to take this new career opportunity, and I did not marry an idiot. And everybody I tell that story to laughs like you do. I almost drove off the road. I was laughing so hard.
Oh, that's awesome. I love
And
that. I
I
love
turned to
that.
her. I said, wait till tomorrow morning. I'll
Yeah.
call Marcella, and next morning, February 1st, switch my license.
Yeah. So talk to me, you touched on your past career, and I'm always curious when there are career transitions. How did that coaching experience and speaking experience bleed over into how you operated as a land banker?
Well, a lot of coaching, as you may know, is asking the right questions and challenging people. And so pretty much when I meet a new potential investor, I start asking them a lot of questions before they even start asking me about land and where is it and how much does it cost and rate of
Yeah.
return and minimum investment and all that. Tell me about yourself.
Yeah.
Why are you thinking of investing in land? What do you know about it? Tell me about your career and your family situation. And because I want to know all that.
Yeah.
Because when we say 7 to 10 years, that's not for the faint of heart. That's not for, I want to get rich overnight. That's not a quick return. So I got to make sure that you're using patient money, which most of my clients will use their IRA money, maybe
Mhm.
a Roth IRA or a 401k or something like that, because that money is sitting there anyway. So diversify it a little bit. So a lot of it is asking questions
Yeah.
and getting to know people.
I think that's so valuable. And I think if there are any brokers listening, I think that if you take anything away from today, that is something to take away because we need to understand in order if for us to do a good job to our clients, we have to fully understand their goals, their expectations. And I think getting to know them on that personal level makes a huge difference in the decision-making process because there's a lot of nuance in real estate.
Yes.
And there might be one little thing that just makes a deal not work for this particular investor. So understanding and being in tune with your client and continue to ask those questions and verifying questions throughout the process is crazy important.
And in addition to that, stalk people. And I say that jokingly,
Yeah.
but before I got on this call with you, I went and read your LinkedIn profile just to
Yeah.
get an idea. I looked at some of your pictures out hiking with your kids. You were president of your local something or other to change. You're involved with the Better Business Bureau.
Yeah.
I wanted to know a little more about you before we got to. I've started conversations with people just saying, "Hey, I see you went to MIT. I'm an MIT graduate." And we'll start off just talking about the TOOT. That was the Massachusetts Institute of
Okay.
Technology. It was called the TOOT for short. So sometimes I start the conversation with some, oh, you liked, I see dogs in the picture. Oh, we
Yeah.
used to have a border collie. Oh, I love border collie. Yeah.
Yeah.
So yeah, LinkedIn, Facebook, do
Yeah.
some background research. And this is
Yeah.
for anybody in any business, not just real estate agents, but
I agree. And I
get
mean,
to know those people.
and I feel the same way even about clients that come that want to come work with us. I
Yeah.
want to understand, do our values align? And I think that's something it's not just about a transaction. This is a value proposition for both parties, right? And
Yes.
it is a two-way street, and we need to be aware and in tune with those people that we're working with.
Yep.
So I know people are probably going to want to get into some practical questions. What's the minimum investment? If someone's just brand new to this, What kind of minimum investment are we looking at?
Minimum investment is $25,000. You can partner with up to 4 non-family members and up to 8 family members. We don't suggest that to people because then all 4 of you have to agree
Yeah.
on exiting, and that can create some problems, especially if it's family. Sometimes that's harder than if they're just people that don't know each other, and it's okay. We do offer free negotiation coaching to help our clients get the maximum return, but 25,000 is the minimum that we work with.
Yeah, and I think something that on a practical side too is when you form these partnerships, it's not just, hey, we're throwing money in this together. No, you're putting together an operating agreement, how the money's going to be handled, how decisions are being made. So you really need to have a good real estate attorney that will help walk you through if you choose to go into a partnership situation, which I have done before. And sometimes it works great, other times not so much. So you got to, again, know the people that you're in bed with, so to speak.
Yes, I love this quote that I heard. I can't remember who it was, but he said, agreements prevent disagreements.
That's really good. That's really good.
In writing.
Right,
I'll add
in
that.
writing,
In
yes,
writing.
exactly, exactly. So you'd mentioned earlier a hold period of about 7 to 10 years. What is that kind of your typical hold period, and what kind of cost is involved with that?
Yeah, oops, there's somebody calling now. I can't shut my phone off. So maybe they
No.
want to buy land. Invest in land because they're not making any more of it is actually one of our taglines. What was the question again?
Yeah,
I
the
got
question was, what's your typical hold
oh,
period?
period. Right.
Yeah, and
So
is there costs? What are the ongoing costs that are associated?
So we tell people 7 to 10 years is average.
Hmm.
People have exited sooner and they've exited later, but that's about the average. So it's not overnight success. It's not get rich quick. So be prepared for a longer hold period.
Yeah.
In California, because of Proposition 13, which your listeners probably don't know about, this was passed in 1978, retroactive to 1976. And I had just moved to California in 75, so I had just heard about it then.
Yeah.
But it caps our property taxes very low. And on vacant land, when it changes hands, I believe it's 1.13% is the maximum that they can assess it at.
Oh,
And so even on $100,000 property, you're talking about like $1,130 or something.
wow.
And they never assess it at the full 1.13% because it's vacant land. There's no
Right.
buildings. You start out with a very low initial tax, property tax, and it can only go up a maximum of 2% a year, and they don't always do the full maximum. So you're talking about extremely low holding costs, carrying costs, I guess is what they refer to it as.
Yeah.
On some of our properties, we pay $90 a year, $120
Wow.
a year. It's ridiculously
That's
low.
fascinating. I learned something new. And is that one of the reasons why you stay very focused on the area that you're in?
Well, we stay focused on the area that we're in because of those 10 growth factors that I talked about earlier. There's so much going on
Yeah.
in the area that we invest in. The laws in the state of California. People say, oh, it's a terrible place to do business, California. But there's a lot of laws that we like.
Yeah.
Like, for instance, by 2045, the state of California has to get all of its electricity for homes and buildings. We're not even talking about electric trucks and electric cars, of which there are millions on the road.
Yeah.
It's talking about homes and buildings.
Yeah.
All of that electricity has to come from renewables, 2045.
Yeah.
So they are going bonkers right now building solar farms. If you
Yeah.
Google Earth, if you go to Google Earth or Google Maps or whatever it's called, and you look down at the Antelope Valley, Lancaster and Palmdale, and this, for your listeners or people that are actually watching this, if it's recorded as a video that they can watch, they can see a circle around LA
Yeah.
on the map behind me, and that's Lancaster and Palmdale right up there, North LA County.
Yeah.
There's so much sun there. You just watch you go back a few years and then watch year after year, you'll see these black squares.
Yeah.
And you look really closely, you can see individual solar panels. Most of the time you can't. But it's phenomenal the amount of land that is being consumed to build these solar farms so that the energy companies meet that goal. Otherwise, they're going to be fined millions and millions of dollars for not hitting it. So the
Yeah.
laws have a lot to do with where
Yeah.
we invest and why we invest in particular areas.
No, and I agree that a lot of people do not California. They're the fourth largest economy in the world. In the
What
world.
state? By the way, just to add a little factoid, did you know that LA County,
Hmm.
just the county of Los Angeles, is the 20th largest
Wow.
economy in the world.
Wow.
The world.
Yeah.
It's bigger than 19 other countries.
Yeah.
And it's a county. It's one little county, one little portion of the entire
That's
state
pretty
of California.
incredible.
Ridiculous.
Yeah, and I love the idea of renewable energy, but then I also deal with the other side when I have clients that are building owners that have to take the expense and do these upgrades, that they tend to complain quite a bit. And then lots of times those costs get passed on to tenants or et cetera. But I think there's a lot of long-term good that can happen through this. And I know that the city of Denver is really pushing that direction a lot farther in the county of Denver. So yes, there's going to be rough patches, right? But we were
So
thinking, well, again, patient investment.
back to my earlier 10 factors where I said business-friendly city government, the city of Lancaster, because it's very aware of these laws and all this stuff, they are the first and only, to my knowledge, city in the United States that is net zero for energy. In
Wow.
other words, the city itself, with its own solar farms, and the fact that all buildings and homes from years ago, decades ago, had to have solar on them, and
Yeah.
all new construction, they produce, as a city, they produce more electricity than they use.
Wow.
So they make money. If you look at their budget every year, there's a line under income
Yeah.
from our solar fields.
Wow.
The
That's
city government is making money that it then uses to provide amenities to the people that live there, the residents that live there.
what a
So,
great example. I
yep.
love that. So we've talked a little about hold period, and people want to know, when do I make my money? What is typically the exit strategy, and what kind of return on investment are you seeing on average on these properties?
Your exit strategy is patience. You wait for the developer to knock on your door. Quick and returns, we like people to get between 3 and 7x. But I'll give you an extreme example. One of Marcella's clients, we don't give out their names, but she bought 10 acres of land, solar land, for $150,000. Had it about 6 months, got contacted by an energy company. They offered her 300,000.
Wow.
She calls Valor. We gave her some coaching. We can't tell her to sell or not sell, but we just told her you can do better, and here's some questions to ask the energy company. Her next offer, I believe, was in around 500,000, 3x, 150 times 3 is 450. She's at 5. We basically said we can't ever give financial advice, Caleb. So we can't say, oh, you should sell. We can say things like, that's an excellent price, or based on what we know about current market conditions, that's a fair price.
Yeah.
That's all we can say. It's up to her to decide. She turned it down. We basically said, we can't help you anymore because
Yeah.
we already told you what we thought. Very long story, very short. After 2 years, she'll be closing at $1.5 million.
Wow. Wow.
10x.
Wow.
We're still shaking our heads going, I would have taken the 500.
Right.
Maybe 750. Maybe I held out a little bit more, and at 750, that's a fivefold. Yeah, I would take that on 100,000, 150,000 investment in 2 years, make 750. So she's getting 1.5 million.
Wow.
Now that's an extreme example.
Of
I don't
course.
want your listeners to all think they're going to do that well, but that can happen.
Yeah,
But
circumstances were right.
yes, we go to 3 to 7x is what we want you to.
Okay.
Sure.
That's incredible. So like when people are land banking, do you consider it a syndication, or do the investors own it outright? I'm assuming there's probably a mixture there.
The investors own it outright, whether they're a group of 4, a group of 2, a group of 8, and I don't think we have that many ever. I'm in a couple where it's groups of 4. It's not a syndication. Your tenants in common. Everybody has their percentage, and it doesn't have to always be equal. On $100,000 property, it doesn't have to be 25, 25, 25, 25. It could be 50,000, 25, and 25. It could be 75, and then whatever, 12 and a half and 12 and a half, or 13 and 12. Has to be round numbers. So there's a lot of different ways to do it. And you get a fee simple deed from the state of California. It's your land. You own it. You can go down there. You can sit on it. You can dig holes. You can do whatever you want, as long as the city lets you do that. And you wait. That's it.
Okay, I love that. So if someone's okay, how do I think you touched on this a little bit earlier, how can people buy land if they're doing a cash only or financed? through retirement vehicles. What are some ways that people can buy land with cash?
With cash.
Yeah.
You pretty much are, it's here, Brad, here's 25,000 in
Yeah.
dollar bills. Obviously, you're wiring the money for
Right.
safety and all that, but you can use cash. You can use retirement funds, 401ks, it has to be a self-directed IRA or a
Mhm.
self-directed Roth. That's a little different than a traditional Roth
Okay.
or a traditional IRA or a SEP IRA. It has to be self-directed. We can give you 3 companies that we like to work with, and then you can choose to work with one of them or on your own.
Yeah.
1031 exchange. I don't know if you've dealt
Yeah.
with that on your previous podcast, but hopefully your listeners know that you're exchange like kind. So
Yeah.
they own some real estate, they sell it, they use the proceeds from that to buy land at a higher price, and they can defer, not avoid, defer taxes to some point in the future. So 1031 exchange. What else? You could borrow from a life insurance policy. You could do a HELOC. We don't recommend those because now you're financing it and you got to pay carrying costs, interest, which is fairly high right now.
Yeah.
So we don't recommend that. But the only 3 ways that I've sold land to customers is cash, retirement vehicles, and 1031 exchange. Marcella,
And we're definitely going to have to get into 1031 exchanges down the road, but in my world, we deal with that quite often. And it's
yes.
important to know who is that 1031 point person that you're going to be working with to guide you through. And I always tell people it's worth the time and effort to work with an expert to make sure that you're coming out on top as much as possible.
Yeah.
So,
You have to use an accommodator. I think they're called accommodators. You have to use a 1031 accommodator. There's like a neutral third party that the money goes to them, they hold it, and then they disperse it. And just like title company
yeah.
would do it, or mortgage company
Yeah,
would do it.
absolutely. So as we start to wrap up a little bit, what kind of help do you offer investors when it comes time for them to sell their land?
So I mentioned earlier that, and there's the phone again. I mentioned earlier free negotiation coaching. So the way it works is, let's say one of my clients got an offer from an energy company. They didn't know what to do. They call me. I call Marcella. She takes all of that information to the CEO of the company. They sit down, they look at the plat map to see where the property is located. They look all around to see, do we have other investors in the immediate vicinity, and have they been approached by this company already, and have they gotten offers? We take all of that information, which is internal to our company. We keep the names out to provide confidentiality. But then the CEO and Marcella work out a strategy. They give me the strategy. I go back to my client, because she's my client or he's my client. And I say, here are some questions we want you to ask the energy company. Who are they?
Yeah.
How long have they been in business? What other projects have they worked on? What's the name of the project, which we already know, but we want her to ask that, or him to ask that. How many acres? How many megawatts per acre will be produced, and how much money will you be earning, energy company, on every acre of land that has those panels? Because then we get a sense of how much that land is worth, because we know how much energy it's going to produce.
Correct.
And now the energy company goes, we'll get back to you. They weren't expecting that. They thought
Yeah.
the person bought the land for 50,000. They were offered 60. They thought, oh, we got a quick sale. We're going to get this land. And now they realize, no, you ain't getting it for 60. Next time they come back and maybe they're at 100. And so now the process repeats.
Yeah.
Investor to me, to the company to me, back to, we get more questions.
Yeah.
Now the energy company goes to the 175. So now they're over 3x.
Yeah.
So at that point, we might say, based on what we know about other sales in the area, meaning we know other Valor people exited at a certain price, we think that's market value.
Yeah.
And then it's up to my client to decide to sell or not.
Yeah. Absolutely. How do people actually, let me go back before I wrap up. You talk about free negotiating coaching that you get. At the end of the day, how do you get paid?
I am paid like a regular real estate agent. I am paid based on the sale price of the land by my boss, by my broker.
Yeah.
Just like any
Okay.
real estate agent is paid by their broker, unless they're the broker, then they're paying themselves. But I get my pay that, and then that's it. I don't get anything else
Right.
on the client. Now, obviously, I love helping my clients, and if they do well, they're going to recommend me to other people and get referral fees. They can make money by now telling their friends about it.
Yeah.
And B, duh, I'm hoping they'll do a 1031 exchange, or they'll take, if it was
Right.
cash, or if it went right back into the retirement fund, they've now deferred their tax as well. If it's a Roth, they've avoided the tax altogether. Maybe they'll buy another piece of land the next day, the next week. So yeah, it's not totally altruistic on our part to help.
Sure.
We would like them to at least go tell other people and possibly reinvest with us as well. And that does happen fairly frequently.
Awesome. How do people get a hold of you?
The best way is email. I don't give out my phone number because of that very reason. It interrupts me in the middle of the day. I'm busy doing something, and I'm not always here in my office to pick up the phone. It's on the screen for those that can see it, and hopefully you'll have it in the notes.
Yeah.
Just email to brad@bradwarren.com. That's my name, Brad Warren. Pretty simple. I got this a long time ago. I figured I would never forget my own name. So I got this back before emails were popular and you could get your own name. So brad@bradwarren.com. I respond to emails even when I'm on vacation. I respond to emails usually within 24 hours, and I'll get back to you. If I'm gone on vacation, we'll wait, but then we'll do a Zoom. We'll get on Zoom together, get to meet you. You can ask me a bunch of questions. You also have to watch a presentation by Marcella on land banking. It's about an hour long. You cannot invest with us until we educate you first.
Yeah.
So you've got to see that presentation. So I may just, first thing might be, hey, thanks for contacting me. Here's a link. Please watch this. And if you still want to invest after you've watched it, then get a hold of me. Saves a lot of time. If they hear 25,000 and they don't have 25,000, then I don't meet with them. It still doesn't make any sense. But if they watch it, they see, wow, this sounds pretty incredible, and they want to take the next step, then I get on a Zoom, we chat, and then we start the sales process, which is more complicated than we can get into here.
Sure.
But actually relatively simple. It's a 2-page contract. You put down a deposit. It's a 21-day close. We have our own in-house escrow department, so we manage the escrow fees. And the only thing you pay for is the land and the escrow fee. We pay the title insurance and the natural hazard disclosure report. We cover.
That's awesome. I love the niche that you're in, and I love I love this job because I learn something new every day. So thank you for sharing your wisdom and your insight, and we'll make sure all of our people know how to get a hold of you. So if you guys are listeners, please subscribe, like, comment, and share. And one more thing.
Yeah, I forgot. We said we would tell people about, or I said I would tell people about the referral program.
Yes.
So if your listeners, maybe they don't have 25,000 or have a great portfolio and don't need to invest in anything else, but they have friends who need help. If they refer somebody to me, they will earn 2% on the gross sales price. So if a listener has a friend and that friend invests, let's just for round numbers, they invest $100,000, the listener will get a $2,000 payment from me. It's called a marketing consultation fee. They'll get a 1099 miscellaneous income form at the end of the year, and they have to tell Uncle Sam that they earn the money. They don't have to, they can do whatever they want. But I would tell them, yeah, you probably should let Uncle Sam know, because Uncle Sam knows. And so that's another opportunity for your listeners who don't want to or can't invest now to at least make some good money by referring people.
And in that process, they're learning themselves and it's something new and exercising a new muscle. Thanks again, Brad. It's been a joy to have you with us, and great information, and we look forward to staying in touch. Thanks everyone for listening.
That's a wrap on this episode of Commercial Real Estate Unfiltered. I hope you found value in today's conversation and feel more confident about navigating the world of commercial real estate. If you enjoyed the episode, be sure to subscribe, leave a review, and share it with somebody who could benefit from these insights. You can connect with me, Caleb David, and the team at David Commercial Real Estate. Just check the show notes for more information. Thanks for listening, and remember, creating space is more than just real estate. It's about building community. See you next time.